Raamdeo Agrawal, Chairman and co-founder of Motilal Oswal Financial Services, is now joining us. Raamdeo, good morning. Thanks for joining us. Always good talking to you, Raamdeo. Now, Raamdeo, you've seen so many market cycles. Anything that comes close to this, the kind of melt up that we are seeing right now, and what's the approach to this market then?
Yeah, the issue is that between 2003 to 2008, when the bull market happened out of complete despondency in 2002-3, post 9/11, I think the feeling was same kind of thing. There was a lot of apprehension whether it is going to market is going to expand or not. How big is the run? Because you don't know how big it becomes. At the beginning, you are always apprehensive. Earnings are not there. Economy is in bad shape. Something or other is there which keeps a lot of people disappointed. But same thing happened. China emerged and the commodity bull run started in 2003. And we know what really happened. I think market expanded 6-7 times between 2003 and 2008. And also one of the factor was the liquidity gush which Greenspan had released post 9/11. I think this time liquidity release is much bigger and it's still on. So that is one part of it. Second is that, again, commodity boom is there. All kinds of commodities are booming right now. I think real change I'm saying is the disturbance in the logistics side, where a lot of things through the containers, transporting is becoming very, very difficult and very expensive. So I don't know how it will play out, but that looks like a very huge risk for a lot of companies and beneficial to some of the companies. So, but this kind of apprehension, you go ahead and market propels into the completely new high. And this is happening on the back of deep correction last year on the advent of COVID. So I would think that we are good for 2-3 years. As I see it, and let's see, where market goes. Already signs of overheating is there, but I feel comfortable.
Okay, so you do feel comfortable despite those signs of overheating. Good morning, Raamdeo. Always great to be talking with you. Let me extend that question also to the primary market, because when the secondary market is in such good mood, it's bound to rub off on the primary market. But again, are you at all beginning to get concerned with the sort of valuations that companies are seeking? A lot of these are new companies. We're still learning how to evaluate them. They're not profitable. A lot of promoters, existing investors are cashing out. Does it make you uncomfortable at all, or is it par for the course?
Yeah, so you don't have to participate. The secondary market is there, which is far more reasonable compared to the primary market. So you have to seek value wherever you are getting, whether in primary market or secondary market. The problem with the primary market is that you can sell shares on promises rather than performance. Second, there is too much of liquidity chasing the IPO, applications, and there is a pop which you get as a speculator. So it's becoming more like a lottery. So that's been the thing. It's a part of the heating of the market, clearly. So yes, there is a thing which is a little concerning, but it will correct itself in the sense that markets will go down, and the heating which had happened just a month back is somewhat lower right now. So I think the applicants will also become, as everything doesn't make profit. Zomato made profit, but a lot of other issues have not made profit. So automatically there will be a lot of correction in the expectations by the new applicants, and hence it will be self-correcting mechanism.
Okay, but there are many more internet companies, or rather this new digital tech companies that are coming to the market, right? You have the likes of Paytm, you have MobiKwik, all these fintech companies going to be listing over the next 1 year or so. What is your advice to investors who perhaps don't know how to value many of these names? Do you just stick with the traditional names, or do you go in for some of these stories that could be perhaps decade-long stories from here on?
My thought process will be work very hard, expand your circle of competence, because these are businesses. See, one of the unique thing about digital businesses are that every company is different. Every company has a very unique business model and unique way of approaching the markets. And some of them are their opportunity is local opportunity, and some of them are very global opportunity. So wherever the opportunity is global, the valuations are going to be far more exciting compared to the company whose opportunity is local. So understanding each and every company is very important, and lots of them will come at these valuations. I don't think anything will remain unlisted. So in next 1 or 2 years, we'll see expansion of all the companies listed, and within them you can choose where you think there is a price value gap, or where you understand that these companies can expand. Because digitally, what happens is the businesses can be expanded very rapidly. Very rapidly. What you can do in a physical world in 20 years, you can do it here in 5 years. And that's where the market comes. And market can value it in just 1 year. And that's what is really happening. So we have to be, this is an opportunity. I would look at it more as an opportunity than challenge. But not all the companies are going to make a lot of money from the current listing price.
Okay, Raamdeo, I have to ask you this, because this has been one of your biggest bets and very high conviction bet on AU Small Finance Bank. Have you been worried by the recent developments there, or is your conviction still intact?
Anuj, don't focus too much on the individual stocks.
I know, that's why I said, but I have to ask you, because that's been your big conviction bet. That's why I asked. Otherwise, I would have avoided.
Yeah, don't bother about what we say or anybody says. Look at what we do. I don't think we sold any shares. That's what I would say. Our conviction is not for 1 day, 1 quarter, or 1 year. Our convictions are for decades. So I mean, you can't. I mean, every company goes through its own challenges. I run a company. I know what all problems happen in running a company, and particularly a growing company. Rapidly growing company in a highly competitive environment. So yes, I mean, things do happen. And HR challenge, or some people resigning, some people coming. These things keep happening. It's part of the story. It's just that there is so much of disclosure nowadays. Any small thing gets reported, and with the social media and CNBC all over, everything becomes very big overnight. So I think we have to, as an investor, long-term investor, we have to learn to live with all this. I hope these things, company will be able to, whatever challenge they have, they'll fight over. And it doesn't change their long-term trajectory, what they want to achieve and what they are competent to achieve.
No, absolutely. Take your point, Raamdeo. I mean, I remember when in the last run it had fallen 70-75%. That was time also you had kept your convictions. So who knows? But I thought I'll just ask.
Okay. Yeah. Fair enough. I guess viewers would want to know. So they've got Raamdeo's view. Raamdeo, I mean, I still have to ask you about these new businesses, because that's what we're all trying to understand. So you tell us, when you're someone who reads on companies and learns about companies so beautifully, and we all learn from you. So, clean energy, look at how Reliance itself is now trying to, completely metamorphosize, whether it's this hydrogen fuel cell, then you have payment. Some of these payment companies, by the way, are presenting at your conference as well. Then there is food delivery, consumer technology. Have you sort of read up or interacted with any promoters, anything that's really catching your attention as a next big thing to watch?
Yeah, thanks to video conferencing, we are so busy. We thought that, when people will stop coming or we stop going, we'll be very free and, stuck at home. But not so. I mean, wherever we're sitting, there's so much of activity. I mean, you can't attend whatever you want, local, global, this industry, this expert, that expert. This is, the best time for the investors who want to understand and learn things about the companies. So newer ideas are coming. Good thing is that all of these are not listed in the public market. Now in the public market, opportunity is in the digital side. That's building up. And we are trying to, at least I'm trying to attend as many calls, whether we buy in or not. We are trying to have 1 hour, 2 hour, 3 hour meetings. We have dedicated analysts now to take care of this particular segment. And we are putting everything to understand how they can scale up, because it's all about hyper scaling. It's about so-called blitz scaling. So the difference between the earlier companies and these companies are, earlier companies take say 4 years, 5 years to double up in terms of size. These companies can develop in few quarters or few months. So that's the basic difference. And second thing is that these companies their growth capex, whatever they spend on growth, that is going out of the P&L, not from the balance sheet. So when you set up a steel plant or a cement plant, you actually put up 5,000 crores, 10,000 crores worth of plant, it gets capitalized, it doesn't hurt your P&L. But here, when you double your customer base from 1 million to 2 million, all the expenditure goes to the P&L. And that depresses the current visible profit, the basis of our conventional valuation. So you have to clear up what has been the growth capex in the current P&L and what is the invisible profitability of the company, and then go about doing the valuation. So I think it is a little complex. I'm not completely on top of it, but if you show me 10 companies, I can say these are 2 companies I like, and hence I would like to put small bets in these companies. What is going to be important in these companies is not the size of the bet. It is going to be how long you stay with this company. So when you put 2% in this company, I remember in 97, 98, I had put just about 2% of my portfolio in Infosys. It became 20% in next 2 years. I mean, the pace at which the Infosys rose between 98 and 2000. So that is what is important. Right now, in these companies, you've got to be putting small bets. I mean, 1%, 1.5%, 2%, and you keep increasing your bet as you understand the company deeper quarter after quarter. Because they're also evolving, you're also evolving. So it's a investing into unknown and unknowable type of situation. So if it goes wrong, you should not be deeply hurt. That's the game.
Okay, that point is very well taken. By the way, the market continues to pick up pace. The Nifty is now up almost 100 points. And just look at Reliance. It's up 3.5%, really leading from the front, almost at the 2,500 mark, Reliance, and huge volumes over there. Raamdeo, I wanted your thoughts on, what's been happening in this whole telecom space, because we are virtually heading into a duopoly now with all the problems that Vodafone is going through. Reliance on its own has, of course, done a lot of acquisitions, etc. This is a stock that has just broken out. But how are you positioned on the telecom space with all that has taken place in the last couple of months?
Yeah, so at our end, individual fund managers have taken different stance. But long term, we are clearly bullish on prospects for telecom, because everything, whatever we are talking about digital, the connectivity is only telecom. And we have two at least most wonderful corporates running telecom here, and they have really transformed the space in the last 4-5 years. So I remain very optimistic on their longer term outcome, though right now all of them put together, because of intense competition, again is not that profitable. The return on assets are very, very low. The turnover on their assets are very low. So I'm sure as the time goes by, they'll all correct their profitability, and no new entrants are going to come. So they're going to have a good time.
Okay, Raamdeo, the one sector where we've seen some problems of late is auto sector. So a couple of stocks like Maruti have really struggled of late. There's many challenges, right? Commodity prices, petrol prices. But you tell us, are there any opportunities now after the kind of run that we have seen in some of these stocks?
I think automobile particularly is going through many challenges, in the sense that one is the cost increase at their own side in terms of commodity price increase, then a lot of regulatory cost increase, BS6 and other transitions. Then you have the collapse of the demand during COVID time. Third, then you have the semiconductor problem. When the revival is coming, demand is there. There is a semiconductor problem. And third is the demand itself. I mean, because of being slow recovery. So I think automobile is going, it's a very integral part of the economy. 50% of all the manufacturing is automobile, and it's very concentrated, run very well, very profitable industry. And yet, and then fuel prices are above $100, which is unheard of. So I think all kinds of challenges are there. And so I would think that the industry has its inherent capability to come back with a gap of time. But right now, very, very near term, at least from a stock profit, their P&L point of view is concerned, is very depressed till this semiconductor thing gets sorted out.
Yeah, so it's been a bit of a difficult patch. Another problem for them is obviously these commodity prices, right? The steel folks, they keep renewing their contracts at higher prices. So that's my next question, Raamdeo. I guess in your conference, the Tata Steel, Hindalco, a lot of big companies are presenting. But do you believe that, where are we in the metals cycle, in the metals curve? Is it halfway done, almost done, just started? That's always tough to figure out.
Yeah, steel prices, metal prices are such that even if you stay here for another 12 months, I think all the balance sheets will be in net cash. All the balance sheets, whatever they had, mistakes they have committed or whatever loan they have taken in last decade, everything will be through, and they'll have so much of cash. So it's not about, I don't think it's about further rise in the commodity prices. It's about how long the current levels are around that current level, even with 5-10% correction, it can stay for longer term. And so much is happening, because this carbon footprint stuff coming from China, they want to correct it. Whether they want to correct it forever, they want to correct it for till the Olympics and all. So nobody knows. And then investment worldwide. So demand is good. Then logistic problem has come up. So it is very difficult to import things from outside at a very throwaway logistic cost. Logistic costs have gone up 10x. So the local guys who are manufacturing here quality stuff, if the local demand is there, their profitability, compared to imports, will be very high. So I think it's a very complex situation. So long as the global prices stay elevated, I think these companies are going to do very well.
Okay, the other space I wanted to check with you, Raamdeo, was real estate, because this whole space, not just the real estate, the builders, but even some of the home improvement companies, the ceramic manufacturers, the pipe manufacturers, lights, fans, consumer durables, etc. This whole space is doing so well. Would you continue to back this space now, and not just stocks, but do you think real estate as an asset class is also a good investment at the moment?
I don't know about, the companies have not conducted themselves very well in the past. I mean, apart from the business challenge, the balance sheet P&L challenge has been quite massive in terms of accounting and margins, and then the loans and those kind of things. So I think one of the historical thing has been the consolidation. Somebody was telling me in Delhi, from about 250 builders, there are only 20-25 left. So that's 70-80% correction in just 2 years in terms of number of builders. So I think that kind of consolidation, ultimately real estate is the biggest business anywhere in the world. And if there is a consolidation, it is going to do very, very good for well-managed companies. So I remain very positive on their outlook. And if the entrepreneurs play it well, instead of profiteering, they go for a quick execution and work on the higher IRR for themselves. I think the opportunity size is very, very large.
Okay, finally then, Raamdeo, we've all spoken about the good stuff, but what's the big risk to this market? I know it's a bit cliche, because whatever you think is a risk, the risk is something else, some unknown we don't know. But anyway, from your point of view, any key risk to this market?
One of the risks, right now, when I hear the stories of logistic challenge, global logistic challenge, is becoming worse. People are thinking that it will improve, but this logistic challenge is becoming complete nightmare. And some smaller countries who are dependent on one commodity or two, they are going bankrupt. They are having deep problems. So I think, I hope this logistic problem gets sorted out in next 6 months or so. But otherwise, this could become a big issue.
And Raamdeo, apart from that, I'm going back to the point that you made, that this in some ways is similar to the early 2000s. Even then, we never knew. The bubble in the housing market got built, and then we figured it's a bubble, and then that was the end of that. So right now, is this a similar bull market? Are we looking at something much bigger over the next few years?
It looks like, when I see somebody send me a rupee chart, they said that rupee is headed for 72 and then 64.5. That's the starting point of, kind of rise of India. We are talking about in last 1 week, the Forex reserve went up from 620 to 633. I think it went up by some $16 billion. So this global liquidity is trying to enter large countries like India in a big buckets. So what it can do to the cost of money and liquidity, which is the first starting point for a mega bull market. And because in the short run of 3-4 years, it cannot be only about earnings. It's all about the re-rating. So I think with the available liquidity. So I see the environment conducive for any kind of play because the fixed income has collapsed, massive liquidity, global money trying to enter in India, industry is doing well after a long period. Government is willing to play the game of growth, which they should. I mean, the only game in town today is that how fast your economy can grow. Because to counter geopolitical risk, I think the best enemy, best strategy is to grow rapidly. And hence the world will come to you and that will give you a lot of taxes to spend in defense or wherever you want to. So I think everybody is in the same boat for growth, growth, growth. And it's India's time.
Okay, I got that. You know, I have one last question. Because this is, of course, the deal of the last couple of days, so I have to discuss it with you. And it is HDFC Life is what I'm talking about. It is a part of your Motilal Focus 35 portfolio as well. You may not want to comment on the individual stock, but this deal of two big life insurance players coming together, do you think that there is a lot more for retail investors in this whole, insurance space, and companies like HDFC Life paying top dollar for other businesses? What is your view on that?
Yeah, so we didn't know Exide Life is so large and so strategic to anybody, but I'm sure the management of HDFC Life, they understand what they are buying and what price they are paying. I'm sure they'll be able to leverage what assets they bought much better. But we are looking at insurance as a much bigger, longer term opportunity and a very secular opportunity for some of them. There are two things. One, as a country becomes from 3 trillion to 6 trillion, the insuring opportunity itself explodes. So that's one opportunity side. Second, I think the PSU play, LIC market share will keep coming down. That has been happening in the past and in the future also. So I think combination of these two factors, they are going to give a huge growth momentum to this very high quality asset-light business in the years to come. So that's the thought process about any life insurance companies in our portfolios, and we are a little overweight in this segment. So I would remain very bullish on this segment, but not for a quarter a day or something like that. But I think really for long term.
Okay, bullish on the life insurance segment, bullish on the market given the way things are. Raamdeo, it's been a pleasure talking to you, listening to you. Thank you very much. And we look forward to perhaps connecting again post the conference. Let's see what new ideas emerge. Thanks for joining in.
Thanks.
Okay, so that's Raamdeo Agrawal, and the market's fired up. Look at